welcome to Personal Finance. I'm Gugulethu Cele. Today in studio, I'm joined by Natasja Hart, a financial planner with GCI Wealth, who joins us now as we take a look at how South African consumers have now more than ever need to cultivate better money habits, especially given the economic backdrop that we're working under. Good to have you with us today, Natasja, and thank you so much for your time.
Thank you for the invitation.
Let's talk about the economic situation in South Africa, and we probably see it all the time in the news. Sluggish economic growth, rising interest rates, and now the Brexit's also been thrown into the mix, influencing global economic dynamics. But from what we know, basically now is a very pertinent time for people to get their money issues in order, right?
I think it's always important, but I think there's so many elements at play today that affects people's view of money and their emotions towards money. So I think it's important to, when looking at your view with money, to distinguish between what you can control on a daily basis and the elements you can't control but that can affect your decisions.
Mm-hmm. But talk to us about the importance, as you've alluded to, that individuals need to speak to financial advisors and financial planners about, given the changing emotional and economic landscape.
Well, I think it's very important to have the conversation with a qualified advisor, because one of your biggest risks in times like these is that emotions will take over and you will make decisions based on information you receive from the media, from the market, and not necessarily understanding the impact it can have on your personal financial plan. And the golden rule is stick to fundamentals. Understand the consequences, understand the influences, and stick to the plan. Don't make emotional decisions during this time.
Exactly. And I take it in your engagement with your financial advisor, it goes back to your needs analysis. So regardless of what's happening on elsewhere in the world, but go back to your needs analysis and understand, like you said, the fundamentals of your plan.
And understand your daily living expenses. I think it's time to go back to basics. And it's those daily decisions we make of where to buy, not to buy, should I buy, do I need, do I want, that can ultimately have an impact. I know it sounds like it's far-fetched, but the reality is it's those small changes in your behavior that ultimately changes your financial outcome.
Mm-hmm. And I know that's talking to some of the ladies like myself who like shoes or cosmetics a little bit too much. But Natasja, if we go back to basics and look at the fundamentals, you've offered some suggestions here. And the first one is taking a look at your short-term insurance figures and reviewing that annually. When doing so, what are we actually looking for here?
So it's actually a very good time of the year to start doing what I call a financial health check now, halfway through the year. The reason why I say it's a good time to do it now is because you still have time, if you haven't planned for your December holiday or haven't planned for what you want to do next year, to start putting things in place. And the same with short-term insurance. It's not ideal to do it in the middle of the year. It's preferable that you do it at the beginning of the year. But it's a good idea to take a step, look at what your short-term insurance covers and see if there's benefits. Maybe if you contact your insurer, they will offer you a discount for an annual premium. Now you've got 6 months to save a bit extra, then pay the premium in January for the year in advance. That might not sound like a big saving, but that then removes that monthly payment out of your budget.
Mm-hmm. If we're also looking at insurance for a moment, you mentioned that this is an ideal time for a mid-health check, but do we also need to be cognizant of the terms and conditions as to when you can change around insurance providers?
Yes, and it's also important to ask those questions of, is there penalties, is there benefits? But the other important thing when it comes to short-term insurance is also seeing that your valuables are insured for the right value. Valuables might have changed, you might have changed some of your circumstances, so make sure that the right things are still insured.
What about bank charges? That's always a contentious issue, but are there ways of minimizing the fees involved here?
Well, I think it's, we get our bank statements, the bank charges are on there, but I don't think we always take the time to understand what the different offerings are. So I know that most banks offer various packages. So if you understand your banking behavior, it might be worthwhile to go and have a conversation. For example, if you're someone that never uses the bank going inside the bank. I mean, I haven't been inside to a bank for years. To pay a fee to access that is not necessary, but if you use the ATM a lot, you might want a package that gives you more free ATM withdrawals. So it's understanding how you use your banking and then selecting the right pricing package, because most banks do offer variable pricing packages when it comes to the banking services you use. And then the other big thing is services you can do for yourself. Rather do them for yourself than going into the bank and paying a fee to access that. For example, printing your bank statements. The bank charges you when you go inside and ask them to do it for you. If you've got online banking, you can print up to 6 months bank statements for yourself at no charge. So once again, it's those small steps that makes a difference. Another big thing to understand is your credit cards. Now that is where it becomes expensive, and it's understanding the interest rate you pay when you use your credit card, and understanding how you use your credit card, because a credit card's a wonderful thing for the right purchases, for the right transactions. But when you start living on credit, that's when the red flag should go up, and that's when you need to take a good hard look. And the big risk here is having credit cards at various banks and then getting into the point where you use one credit card to pay for another credit card. Now once you're at that level, then it's time to have a serious conversation about debt and where you're at, and have a structured plan to reduce your expenses on the credit card. And then once a credit card's cleared, rather get rid of that and only have what you need.
Exactly. But so often talking about these banking packages as well as credit cards, they're also linked with loyalty programs and even independent loyalty programs from retailers, which need you to take out an account with them sometimes. How do we balance the fact that you actually get a benefit for having these access to additional credit or whatever loyalty program benefits that there are?
The first thing to understand is, does the loyalty program cost you anything? If you have to pay to join the loyalty program, the first thing you need to do is to understand, what is this fee costing you and what are the potential benefits, and then once you're into the program, the actual benefits. Now if you're paying more to join the loyalty program than the benefits you receive, then it's definitely something you should consider if it's worth keeping. There are very good loyalty programs, and if you use them appropriately, you can benefit. But one must always be aware of, why are you doing it, and is it a benefit you actually will use, a benefit you need, or is it something you're just doing for a potential benefit? If we do move on to one of the other themes that you've mentioned, and this is a tricky one that I even struggle with, cell phone contracts, because you always want the latest phone with the latest additions and features with enough data and airtime supply, but geez, it does come at a significant cost, doesn't it? And that's a complete different market, because you can't even compare packages, and you can't, it's not always clear what you pay for, what you get. So it's a very complicated market, and I wouldn't profess to be an expert. But it's once again understanding how you use your phone. So if you're using more data than calls, I mean, I look at the youngsters today. I get a better response from my stepkids sending them a WhatsApp than trying to phone them. So it's understanding how you use your phone, and once again structuring or selecting a package that provides those benefits and not having benefits that you won't use. I mean, some packages offers you 1,000 SMSs. If you're not going to use an SMS, you are still paying for that, even if it's a small amount. The other big thing is to understand data. Data can be a very expensive method of communication in a month, and if you don't understand how much you're paying for the data and how you're using the data, that can catch you off guard.
Goodness. Then how do we deal with promotions? Because sometimes we get a lot of phone calls to say, hey, look, you've been a valued customer, we're offering you this great deal at so much this per month, but meanwhile it's actually you signing on to another 24 or even 12-month contract. So how do we deal with promotions as well? Because I mean, every consumer likes a good deal, even if it comes at an additional cost.
Well, my advice would be to do the research. You know, sometimes procrastination can work in your favor, in that they don't just run the special for 24 hours. The special will be there for a while. So what I find works well is, when I do get the calls and it sounds like something I might be interested, I always ask them to send me some information in writing. And that's normally where you then will decipher what is the marketing part of it and what's the factual part of it. Also, gather the information and go and compare. look at because they're always running similar specials in the market, and this goes for most products. So rather go and spend the time, go to the various providers and see what's on offer, and then make an informed decision. I would say the worst thing you can do is to make a compulsive decision and say it sounds good without having the facts. And even if you miss out on the deal, the chances are that you've protected yourself from spending money you didn't want to spend.
Precisely. But before we do go to a quick recap on the notes to self segment, long-term debt, because that's probably asset purchases that are very significant, vehicles or household. But how do we deal with the changing dynamics that we're in right now with dealing with our long-term debt? Because it's not always easy to pocket an additional amount to hopefully kill the interest there.
Yes, so long-term debt is generally seen as good debt because it's normally backed by an asset. So for a bond, for example, there's not many people that can buy a house cash. So that's seen as good debt, and it's over a long term. One area that one must be careful of is when you're looking at purchasing a vehicle. That is a depreciating asset, and we are in society sometimes under pressure to purchase a vehicle for the image and not necessarily for what benefit we can derive from it. So I think it's time to be honest with oneself about what you can afford and look at other benefits when purchasing a car. For example, what's the fuel consumption? I mean, when I purchase my cars, the salespeople are very surprised that ask a lot of questions about fuel consumption, fuel efficiency, because that is an expense that you have to carry monthly, how much money you spend on the fuel. And also the maintenance and service packages that comes with the vehicle purchase. That can save you in the long run.
Well, let's get a quick recap now of some of the major issues that we've discussed this evening, and hopefully they'll benefit the viewers who've caught the tail end of this discussion. Natasja, very briefly, for someone who's caught the tail end of tonight's discussion, what are the key considerations they need to bear in mind?
I think it's to know what you're spending your money on a monthly basis, and just because you've done something in the past, don't assume that it's still the right thing to do. Therefore, review your bank charges, review your short-term insurance, understand your long-term debt, and be very careful of credit card debt.
Well, we'll leave it on that note for this evening. Thank you so much for your time today. That was a big thank you to Natasja Hart, a certified financial planner at GCI Wealth, joining us this evening on Personal Finance. If you're one of those reviewing your banking fees as well as insurance benefits, get in touch with us and share your views and experiences on how easy or difficult the process has been. Tweet us at CNBC Africa using the hashtag Finance410 or myself at Gugulethu. Until next time, have a wonderful cost-saving evening.